All right, let's broaden it out for a moment and talk about what is going on with stimulus right now. The House Speaker, Nancy Pelosi, said that several disputes need to be resolved still before a new stimulus package can come and be approved before Congress. The bill, she said, should be at least $1.3 trillion, which she said is still not enough. Remember, the last stimulus checks are going to be sent on July 25th before this slice of aid expires on July 31st. So what effect is all of that going to have on the jobs market? To talk more about that, let's bring in Daniel Zhao. He is Glassdoor Senior Economist. He's joining us from San Francisco. Daniel, thank you for being here. So as we look at the potential for more stimulus here, there is, of course, also this dynamic of people not going back to work because they're still getting the stimulus checks. What effect do you think all the ending of this could have if indeed Congress doesn't act in time?
Well, I think it's important to remember that the expanded unemployment benefits are an enormous amount of financial support for both workers and the economy. And so the expiration of these benefits represents a real risk to the economy at a time when we are seeing evidence that the recovery is stalling out. And so I think that, people talk about whether the benefits are preventing people from going back into the economy. But at the same time, we know that job openings are down. We know that demand for workers is down. And so the real concern to me is that we're withdrawing financial support from the economy right when it needs it most.
Daniel, you talked about the overall impact to the economy. What we've seen in many cases with the stimulus checks, as well as the enhanced unemployment benefits, is that people have actually been spending with it, not necessarily just hanging on to it and saving. So, I'm wondering if that goes away, what's the hit to the overall growth? How do you see that impact playing out?
Yeah, I think it's a huge percentage of people's incomes at this point. And also it's important to remember that a lot of the people who are receiving this financial support are the ones who need it most. And so a lot of that money is getting injected directly back into the economy and is helping support families in need. And so I think that there is a risk that spending will come down substantially if the financial support is withdrawn.
Hey, Daniel, it's Brian Chung here. Something that's been interesting from anecdotes we've been hearing across the country is that businesses have been trying to reopen, whether or not that's a restaurant or a retail storefront, but have been forced to not reclose because of tightening restrictions, but because they just found that it's not profitable to operate anymore. So a lot of those temporary furloughs are turning into permanent job losses. Are there certain pockets where you're seeing that as more the case than in others? I know there's concern that more white collar jobs could also become permanent losses as well as we get deeper and deeper into this crisis.
Yeah, that's a really good point. I mean, I think that it is important to remember that the vast majority of layoffs right now are still temporary, but there is an increasing percentage of them that is permanent. And what we've been seeing is kind of a ripple effect through the economy where the initial effects of the lockdowns and the crisis have hit restaurants, retail, those industries hard, but the ripple effect through the rest of the economy, like white collar industries and such, is from the economic slowdown and the uncertainty that is being caused. And so this is something we're actually seeing on Glassdoor, where job openings have been improving from crisis lows for food services and retail, but have actually started reaching new lows now for sectors like government and the technology industries.
And Daniel, I want to follow up on that because indeed you saw a decline in job openings in tech, of 4.5% in the last couple of weeks. Is that where we are in terms of the period you're measuring? Is that also because for retail, for restaurants, they shut down, now they're reopening and rehiring? Tech didn't really shut down, right? So that could also be behind what some of the dynamics. So what do you think will be the continued trajectory then in technology, for example?
Yeah, I think that's exactly right. So because a lot of restaurants and retail stores have reopened, they're still riding that rebound from the reopening process. But because a lot of tech and other white collar businesses didn't have to shut down, you're seeing more of a pure unadulterated effect from the slowdown. And so I think that if the public health crisis continues and isn't curtailed, then we're going to continue to see that escalate for tech and for other white collar industries like finance and such.
Daniel Zhao is Glassdoor Senior Economist. Thank you for joining us. Appreciate it.
Thanks for having me.